Well, hi from the Protea Branch. We're super excited to have you all online for the first in our session of Protea Power Hours. As you know, our Education Forum has been an eagerly anticipated annual event, and we knew that lockdown couldn't put an end to what was fast becoming a permanent feature in our Protea calendar. With that in mind, we set out to bring you an event in a different format, as well as ensuring that CPD points could be earned. Today is the culmination of loads of hard work from my very capable committee members. And I'd like to take this opportunity to especially thank Lauren and Carbo for rolling up their sleeves and investing so much of their time and effort in getting the show on the road. And thanks to Wahida, Solani and Sandra from the FIA for their efforts as well. Today's topic is particularly relevant to both business owners and individuals alike, as the likelihood of being audited by SARS is now stronger than ever before. And without further ado, we have Willem Lombaard, who's the MD of Tax Risk Underwriting Managers, to talk us through the value his business can offer. Before we start, could I just ask everyone to turn off their cameras and mute themselves if it hasn't been done already, just to make sure that our stability of the video is good. And over to you, Willem.
Thank you, Karen. Good morning to FIA members. Thank you for inviting me to the session, which I believe is the first session of its kind. Online, so it's an honor, so thank you for your time. So I'll get straight back into it. Just a little bit about Tax Risk Underwriting Managers. So we're the only specialist underwriting manager of tax insurance in South Africa. So we're underwritten by both Hollard and Bright Insurance Company, and so that's in short us. But I'm not going to bore you too much with all that detail. I'm going to try and share my screen here. Karen, if you can just give me a shout if it comes up on your end, if that works.
It's up.
All right, brilliant. Thank you very much. So my purpose today is not to give you a motivational pep talk. I'll start off with a bit of a positive spin on things. These are the corona statistics as of this morning. As you can see, the curve is heading downwards. We've recorded the lowest amount of new infections in a very long time at 2,511 as of this morning. There's a lot of debate on the accuracy of these numbers, what influences it, if all the cases are being reported. But in general, if you compare apples with apples, it does appear that we've crossed the curve, although many people will have different views on if we're due for a rebound and if these numbers are accurate. But in generally speaking, there's this positive sentiment that spring's on the way. It's spring's almost 2 weeks away. The curve is looking like it's going the other way. We have news out of Russia, of all places, of a possible vaccine being developed. There's about 20 human trials on the go for vaccines. So there's this almost artificial positiveness about what coronavirus is going to do with us in the foreseeable future. But the legacy of the coronavirus is going to be with us for a while, especially from an economic point of view. And that's the reality that I intend to bring home to the members today is although slowly but surely we'll get back into industry and people will slowly but surely get back onto their commercial feet, the legacy of it from an economic standpoint for South Africa is still going to be there. So I would like to share with you this. I'm on a WhatsApp group with a bunch of restaurant owners, separate from my tax business. So this is a WhatsApp that I received Thursday evening. So that's almost a week ago. So I'm sure you can all read it, but I'll help you. SARS has unlawfully cleared out our bank account. We are unable to open. Can anybody help us? We are not delinquent in any way. We pay our bills on time all the time. Please, can you assist? So, and the reason why I brought this up is because this is this sort of summarizes what I will be talking about today, that the exposure that the average taxpayer is having to SARS is significant. It's every day, and it stands to get worse. And that's the reality of the matter when you look at the current economic conditions. So this little WhatsApp is so typical of what I and my business is seeing at the moment more and more regularly, and what will happen to the average business owner. And so, by the way, this is not a massive restaurant. This is, and one would expect SARS to lay off the hospitality industry, which is going through a fantastically difficult time now. You know, they're probably the people that are hardest hit by the coronavirus, and you would expect them to lay off those vulnerable industries, but that's not the case, unfortunately. So here's the agenda for today. So today I'm going to talk a little bit about coronavirus. I know we're all sort of coronaed out at this point in time. I call it the great tax disruptor. As we'll go through the presentation, you'll see why I say that. Then I'm going to bring it home a little bit with what's in store for us as taxpayers and for your clients at the end of the day. Then also I'm going to bore you with a little bit of statistics about SARS and the tax collection around SARS. And then finally, I'll talk a little bit about the product. I'm not doing product training today, so I'm just going to do the highlights so you know how this whole thing fits together. And at the end of it, I'm going to share with you some thoughts of what we're doing for distressed taxpayers outside of the insurance product, and how we're currently going about to help distressed taxpayers out from a tax point of view, applying our skills and knowledge there. So before we get there, I always like to start off with a little bit of current affairs. Yes. So the current affairs, of course, is auto assessments. So when I drafted this presentation a week ago, I was still talking in future tense. Auto assessment is now present tense. If you are a provisional taxpayer, you wouldn't have been affected by this, but lots of our friends and family members who are normal taxpayers are being subjected to auto assessment. So auto assessment is a brand spanking new thing, where SARS is able to access third-party information. And what third-party information is really is they access your bank, they access your medical aid fund, they access your insurance policies, etc. What follows then is an SMS, and it says you either owe SARS XYZ money or SARS owes you, one of the two. And so there has been a lot of unhappiness about these SMSs coming out because they tend to be wrong. And that's to be expected because it's the first time ever that SARS has done this. So I'll read from you some feedback from one of our top accounting firms that we use when we deal with these type of insurance claims. It's from Graham Sagers. He's the Director of Tax at Nolan's Accountants and Auditors. He says, a few thoughts on the SARS auto assessment from us at Nolan's Tax. General principle is don't get too excited or concerned by the SMS you receive. Log in and check the assessment or ask your tax practitioner for help. The process is primed for both errors and spam or phishing opportunities. So take your time to make sure that everything is correct before accepting or editing. So the message from the accounting fraternity, and this is through all accounting fraternities, is the auto assessing is the new process. If you're a non-provisional taxpayer, don't panic if you think it's wrong, if it's out of kilter with what you expect. Go into your e-filing system or ask your tax practitioner to do that and check that the information is correct. They might have received information incorrectly from the third party, or there might be information that they just don't have access to, which will all affect your tax return at the end of the day. So as a last slide on current affairs, just to make a mental note of the due dates coming up for you guys. So 22 October is the cutoff date for taxpayers who still go into SARS branches to submit their tax returns. The few of them that's left over are still doing that. On 16 November is the cutoff date for non-provisional taxpayers to submit their taxes via e-filing. And of course, these are the taxpayers that has not been auto-assessed through this new campaign of SARS. And then of course, 29 January 2021 is the cutoff date for provisional taxpayers. So if you fall into any one of those classes, make a mental note, those are your dates coming up. For the provisional taxpayers and those who did not qualify for auto-assessing, you can start submitting returns on 1 September. So Spring Day is your day for tax. Sounds like a great day to start your taxes on. Right, the first item on the agenda is COVID-19, the great tax disruptor. So our beloved Commissioner of SARS, Mr. Edward Kieswetter, has been in the job now, I would guess, for just over a year. I would guess he's now maybe feeling sorry that he took the job, seeing that we have all these challenges on the go. So he says in a recent article that around 30,000 companies have been forced to apply for tax directives. And when you apply for a tax directive, there's a few things on the go in your business, but one or two of them can be you either going into business rescue or you're going into liquidation. So 30,000 companies being affected currently. He further goes on to say, and this is fairly common knowledge in the general media, is that we are staring at a contraction of the economy of around 7.2%, which is massive. And of course, then the longer term problem with that is that there's a contracting revenue base within SARS. So SARS will not be able to collect the taxes they need to collect in order to pay the bills. So if we look back in history just a little bit from the 2018-2019 tax season and even before that, we can see that SARS has been in trouble for quite a long time. They haven't been hitting their collection targets, and when you don't hit your collection targets, you can't pay for stuff. You know, it's a very simple equation that all fits together. So this is in relation to 2018-2019, where they confirmed they're missing it for 5 years in a row, and then the next tax year, 2019-2020, says that they'll be missing the tax collection target for a 6th year. This is, of course, Mark Kinghorn, who at that stage was the acting commissioner after the departure of Tom Munyane just before it. Right, so, and we fondly look back at the days in the last tax years when we saw headlines of this potentially being a 50 billion rand tax shortfall. This is a similar slide that I presented at the FIA session last year, and we were all shocked. We were all shocked about this big hole, about the tax that's not being collected, despite the fact that the additional VAT went up from 14% to 15%, and it was massive news, and people were baying for heads to roll. If we look back from 2013, 2014 up to now, this graph just gives you an idea of how the collection targets versus actuals have grown for SARS. So the pink is the actual, and the blue is the target. So as of last year, SARS was due to collect 1.3 trillion rand in tax revenues, but they collected 1.287 trillion rand in tax revenues. Right. So, and then this happened in 2019, 2020, and everybody thinks they shoulder. So everybody hand sanitizers, wears masks, and becomes very, very upset with the situation. And that's what I call the great tax disruptor. So if we compare June's revenue to this year to June's revenue last year, we are already 73 billion rand behind target on a year-on-year basis. Tito Mboweni in his midterm budget projected that we'll be in total 300 billion rand short on tax revenue, which is 15 to 20% short. So as I said earlier, we long for the days when we're only 50 billion rand short. That pales into significance of the shortfall that we're currently staring. And that, of course, puts a severe strain on the country's ability to pay back its debt. So the gross national debt will stack up to around 4 trillion rand, which is 81.8% of the GDP. And if you compare that against last year, so we were on 3.56 trillion rand. So you can clearly see the debt of the government is escalating at an alarming rate. And so this is an interview with Mike Schuessler. I'm going to play you this video. It's about 4 minutes long. It will also break my monotonous voice a little bit. And I got this morning. This was an interview that was done on Monday, on Women's Day. And it really, sort of describes the dire situation that the economy is in. And as I warned you before, I wasn't here to give you any good news today. So it is a fact of reality that we need to understand this.
This story, government is said to be spending billions of rand a month, and economists are now worried. This comes with some warnings by the chief economist at economist.co.za, Mike Schuessler. He's going to talk to us about what it all means. Mike, good morning, and thank you very much for talking to us on this public holiday. We saw your tweet where you are mentioning the staggering amount of money that's being spent by government every month, and you are warning that this is a very, very deep hole. I'm quoting your words on Twitter. How bad is it?
Well, at the moment, we're spending roughly 50 billion rand a month more than we receive in revenues. So we're making 50 billion rands in debt. And it's going to get worse because we know from the government budget that we're heading to 60, 65 billion a month. And that is a huge amount of money. That means it's basically we're spending 2 billion rand more every day than we get in income from, that the government gets in income. The government is spending 2 billion rand a day more, and at some stage we have to pay that back.
Where is this money? Sorry, Mike, before we talk about that payment pain we're going to suffer, where is this money going to? Is it all due to COVID-19?
No, about half of it was going to happen anyway. So about 325 billion was going to be our deficit. It was going to be large, and that's why we got downgraded. Now, however, because of COVID-19, our tax collections are coming in. We believe now roughly 313 billion less than was expected. So there's another 300 billion. We're also going to be spending over 50 billion more on everyday things like grants. We're also spending more on hospitals and so on. So it all adds up. We get to a hole that government has got at the moment between 710 billion, which they are hoping for the year. But many economists are now looking closer to 800 billion for the year. Let's take split the difference, and we're looking at just over 2 billion rand a day. And yes, it is the taxes they're not collecting because people losing their jobs, the cigarette, the alcohol ban, people are driving less, so less fuel taxes are collected, less VAT is collected because when people lose their jobs, they don't have money to spend. So we're looking at a very bad revenue for government, and at the same time, government is having to spend more, so they're spending more on grants and so on. Remember, this also leaves out the UIF because the UIF is something different, but basically we're looking at a government that's going to spend about 100 billion rand more this year.
Does the picture get worse if you factor in the loans that the government is now getting, including the one that's coming from the IMF as an example?
Later, yes, but we must remember the IMF hole, the IMF loan is helping us to fill the hole. We need to find ways to fill that hole. If you're going to spend over 700 billion for the year more than you're going to receive, you need to lend the money somewhere. And as you know, we've been downgraded, so our debt is becoming more and more expensive. So what the IMF is doing, they're giving us about 10% of that, which is 70 billion rand, roughly speaking, and we pay a very low interest on that. So that gives us a bit of room to maneuver. But we've got to remember, we're going to have to cut back somewhere and tax higher. So, and we're already a high tax country. Yeah. So we are in very, very deep trouble in the next few years.
Okay, so I'm going to end it there because then we just carries on with a little bit of the statistics, and I'm going to bore you enough with the statistics as it is. So what we're seeing in summary is revenues collapsing at a time when social and economic need is surging. So this is from the politician Margaret Thatcher, who, you know, some people love her, some people hate her, but she knew her stuff. And she says, let us never forget this fundamental truth. The state has no resources of money other than money which people earn themselves. If the state wishes to spend more, it can do so only by borrowing your savings or by taxing you more. It is no good thinking that someone else will pay, that someone else is you. There's no such thing as public money, there's only taxpayers' money. So it's a little bit of looking at your own bank balance, your own income stream and your own expense stream. If you don't have enough money and you spend more than what you should, you go out borrowing, and when you go out borrowing, the repayment of that debt becomes problematic. So what we know and understand in our business is that SARS is under severe collection pressure. They have been under pressure for quite some time over the last 6 years. They've gone through massive political upheaval in the era of Tom Monyane. They're sort of coming out of that now. We see a lot more skills and capability and rational thinking coming back into SARS, but they will remain under collection pressure more so now than ever before. So they are looking at new and innovative things, and they have been developing this third-party collection mechanism where they are able to go into your bank account, for example, clear out the bank account in lieu of settling any tax debt that they claim there might be. And we are seeing this occurrence more and more and more and more. And that, of course, is leaving taxpayers suffering more financial hardships. And if I refer you back to that first WhatsApp slide that I showed you, This was a restaurant that was about to open the doors for business, and then all of a sudden all the money was gone. So, you know, that creates a real financial hardship position for this person. And we're still, as I said, say at the bottom of the slide, recourse against SARS is complicated. And you have very limited recourse against SARS. So this is from Baker McKenzie, it's a well-known accounting firm up here in Johannesburg. They say, given the current economic climate and the revenue shortfall highlighted by the Minister of Finance, Tutu Mboweni, it is not impossible to imagine that the South African Revenue Service will be looking at all avenues to collect taxes due. And that's the common theme amongst all accounting practices going around. So to lighten the mood a little bit, what's in store for taxpayers? So here's a little slide I found. It says, government, you owe us money. It's called taxes. Me, how much do I owe? Government, you have to figure that out. Me, I just pay what I want. Government, oh no, we know exactly how much you owe, but you have to guess that number too. Me, what if I get it wrong? Government, you go to prison. So unfortunately, in this increased effort that we're expecting coming out of SARS is not only the tax dodgers that will get affected. We know and understand that the number of tax dodgers in any economy is a minute number. It is only really the criminals that, you know, that have criminal intentions that practice tax evasion. And they generally get found out and they will get taken to task. And these are the people that you'll see in the newspapers. But the general tax-paying populations do not want any issues with SARS. They want to pay as little as tax as possible, but honestly and fairly, so they can get on with life and make some money. So we also know that there's a significant increase in SARS using banks to collect tax debts. We see this in our claims office all the time now these days, and more so than ever before, where we will get our clients phoning us and say, listen, my bank's account's been cleared out. We also are starting to see more and more and more SARS collecting outstanding taxes, not just from the taxpayer's bank account, but from people who owe the taxpayer money. So that's not just third-party collection, that's in fact collecting money from the taxpayer's debtors, which in the past we always knew that they had the right to do this in terms of the Tax Administration Act, but we haven't really seen it. In the last 3 to 6 months, we've seen a couple of cases where SARS wrote to the taxpayer's debtor and then collect, instead of the taxpayer collecting his outstanding debt, SARS takes that debt over, which they're entitled to do. There's provision in the Tax Administration Act to do that. So we're seeing more and more of that coming up. We're also seeing a lot more irrationality coming out of reassessments, where we at the end of, when we finish dealing with the claim, we actually still don't understand why SARS took the action that they did. So there's loads of these things on the go where SARS is either taking shortcuts or the competence levels of the people that execute on these assessments aren't great. And we see a lot of irrationality coming out of SARS. And unfortunately, if things do go wrong, you probably need to take legal action against SARS. We know in the tax system, there's an ombud, similar to the insurance system. There's an ombud that people can appeal to, but more often than not, the tax ombud is a waste of time. So we tend not to go that route. We tend to, you know, go through the preliminary processes, and when all else fails, we'll then take legal action. So what should you do when SARS clears out your bank account, or for that matter, if SARS just raises the normal assessment and say, you owe us taxes, please pay now and argue later? So you can raise an objection by the SARS official channels. There's processes to follow in regards to that, and your accountant is probably very well aware of how you resolve a dispute internally with SARS. You can, of course, pick up the phone and make contact with SARS debt department. You can raise a grievance through the contact center, which is most often an exercise in futility, because SARS is less effective in returning your money than they are in taking it. For a long time, we know it's been all over the media. SARS has been behind by literally billions of rands in refunding VAT refunds. So where you urgently want to get a transaction reversed, unfortunately, you have to put an urgent order to the High Court. So here's a case in point. It's quite a long case. I'm just going to give you the highlights. It's a recent case from this year. SIP Project Managers versus Commissioner of SARS. SARS went out, took 1.2 million rand out of the bank account, which they can do so in terms of Section 179 of the Tax Administration Act. But SARS failed to comply with all the provisions of sections 179 of the Tax Administration Act, including they are obligated to, before they raise an assessment and before they collect any taxes, they must issue you with a letter of findings and give you 21 days to respond to that letter of findings, which in this case SARS claimed they have done, but there was no evidence. So the client had no letter of findings. There was no such thing on e-filing, and therefore the High Court ruled against SARS and then ruled that the money was obtained unlawfully and must be returned to the client. So the bottom quote that I have there is from the lawyer involved in this. The laws is there for a reason, and when it comes to debt litigation, the courts of South Africa act both swiftly and decisively to ensure the protection of taxpayers against the anarchy created by unfettered abuse of power. And in some instances, we have seen this as unfettered abuse of power. For whatever that reason might be, it is not the tax dodgers necessarily that get affected, but also the honest taxpayer. So there are proposals for the Revenue Office to bolster revenue collection. So government can stabilize this debt really through two things: reforms in economic policy to boost economic growth, and then measures to increase revenue collection and lower expenditure. Now, the measures that they can take to reform the economy includes reducing the government spending. But it's a hugely political environment. Tutu Mboweni proposed to cut 230 billion rand out of the salary bill of public officers, and it will be met with massive political opposition. So although those mechanisms are available to the state to reduce expenditure, it is not an easy task. Because of the environment that we operate in. A more easy task is to just increase revenue collection. Although you can only tax the population to such an extent, and thereafter it becomes negative. So there's a curve, which they call the Laffer curve, that says you can only collect up to a certain extent, and thereafter it becomes counterproductive. So you raise the taxes and you actually collect less. So they have to keep that in mind also. So Treasury said that they'll improve tax collection, and administration will be an important element of achieving this stability. So we've already talked about that. So South African Revenue Service will be focusing on international taxes, which doesn't affect the general man in the street. It's where companies move their tax-paying jurisdiction from one country to the next to take advantage of those tax benefits. But then also increasing enforcement in the elimination of fraud related to VAT. And as I said before, unfortunately, it's not only the VAT fraudsters that get affected, everybody gets affected, because in order to get to the fraudsters, you have to evaluate the whole tax pool. And then expanding the use of third-party collections. So we know and understand they're going to use this third-party data to pre-populate tax returns more extensively. It will evolve over time. It will get a lot better. We are convinced of it. And then improving collection of debt due to the fiscus, and that will affect you and me. Right, so every year SARS issues two papers. One is the annual report, which is this one. This is the front page from the report, which takes stock of how last year's tax collection went. Then the second paper they issue is the plan for the next year and for the next 5 years. So just some highlights from this annual report. So from the annual report, this is for the tax year ending 31st March 2019. SARS collected 1.57 billion rand, so it's 1.5 trillion rand in tax revenue, resulting in a deficit. So they were 1.1%, 14.5 billion rand behind taxes. But again, this is based on the revised target, not the target at the beginning of the year. And that represents a growth of 5.9% from tax collected last year. The significance of this almost 6% growth in tax collection is against the backdrop of an economy that grew less than 1%. So although the economy is not growing, the collection of taxes is growing significantly. And there's various reasons for that, including VAT, the additional 1% VAT that came in. But a large percentage of this is just the efficiency of SARS to get money out of the tax-paying population. So this shows where SARS are not happy with themselves. So they have certain predetermined outcomes, certain objectives, and one of the objective, outcome 2, is to increase tax compliance. Increase tax compliance means people pay taxes better as what they're supposed to. And they have 8 sub-items under that outcome that they're not happy with, which is the highest outcome. So one can clearly see if they want to sort of adjust the tax collection mechanisms, want to calibrate that better, you look at where you're not happy with yourself, and that's where you're going to be paying attention. So out of all the red blocks, the increased tax compliance is the one they're most worried about at this point in time. This graph gives you a breakdown of where the taxes come from. So by far, personal income tax makes up the majority at 38%. So you, me, and everybody else paying taxes. And then company taxes, which includes company income tax, VAT, and then STC, secondary tax on companies, makes up the other bulk majority. So you can, the rest of it is left up to fuel levies, customs and excise, property tax, and so on and so forth. So the bulk of taxes that SARS collects comes from individuals on the one end and then companies at the other end. And you would think it's the large organizations that are contributing. That's in fact not the case. This graph just briefly shows the growth in taxes from personal income tax. We can see have grown in the last 3 years, while company income tax have declined slightly in the last year. And then VAT again has increased slightly over the 3-year period. So this is an insightful slide. It shows where SARS is concentrating or focusing their efforts in collecting taxes. So there are 26 million registered taxpayers in South Africa, of which 22 million is individuals, and then the rest are then split between companies, pay-as-you-earn, VAT, etc., as you see on that slide. And SARS audited 13% of this tax base during the last tax year. That's according to the SARS statistic. It is 1% more than they target. They target annually hovers around 12%, so we know they've audited 13%, which is 1% above their stated target. But this is where the crux of the matter is. So this top item here, the 1.9 million audits that was conducted, of which 30 billion rand additional taxes were raised, comes from personal income taxpayers, so individuals. So by far the bulk majority of audits comes out of individuals, and it raises a significant amount of additional taxes as a result of that audit. The next highest one is small to medium enterprise, which is a travesty. You know, it's where you want the economy to grow, but yet SARS is focusing the attention on there, and by far collecting the highest amount of money from them as a result of audits. So additional 43 billion rand was collected from almost 10,000 small to medium enterprises. You can see there in light blue, it's a 92% success rate of collecting additional taxes out of small to medium enterprises. It's a massive number, and it affects a large number of taxpayers. Then you'll see here, the next one is the large companies. So large companies in the SARS definition is more the industrials. Only 674 of them were audited, and they only collected 17 billion additional taxes. And high net worth individuals, SARS doesn't classify or define how they classify high net worth individuals, but 78 of those guys were audited, private individuals collecting an additional 267 million rand. So by far, individuals and small to medium enterprises are exposed to tax audits from SARS. Why? Because that's where the money is, that's where the low-hanging fruit is, and that's probably where the least amount of fight back is going to happen because of the resources available to those individuals and companies. Right, as I said, SARS issued these two papers. The one paper is the one that we've just briefly, at the highlights out of. And this one is the annual performance plan, which is the plan for next year and the year forward. And I'm saying this is cancelled because this was drafted before COVID. All bets are off. Whatever plans they've put into that plan is probably null and void for the most part. So it's there. You can download it from the SARS website if you're interested in that sort of thing. It's quite a lengthy document. I think it's probably 60 pages long, and it concentrates on a lot of things, but all bets are off following COVID. Right, so there's a headline in May. SARS is still collecting taxes, but with the help of gloves and sanitizers. So the rest of us are still paying taxes. Right, so I'm going to start a little bit about why is all this important and what the role of tax risk insurance is in all this mess. So we know and understand the country is going through a very, very difficult economic time. We know and understand the demands on the fiscus is at an all-time high, and the government needs the additional revenue coming in. They can only get there by collecting additional taxes or borrowing. We know that they've recently borrowed from the IMF to the tune of 70 billion rand. Probably another 10 coming from the Bank of Africa, probably another 10 billion coming from somewhere else. These are generally low interest rate loans, so it's good for the country to get those in. I think the interest rate is pegged at around 1.1% of those large funds. But so I'm trying to boil down where we are with this case study. This is the same case study that I used during my last presentation. So I'll only briefly scan through it. It's one of our policyholders. So she received a normal tax return, in terms of which SARS says she owes 604,000 rand. This is a company that turns around 3 million rand a month. So it's not a large organization that you would expect this big tax bill to come from. Clearly, there was a big panic attack. We appointed some lawyers in the Eastern Cape called Stromberg Petersen Attorneys, one of the best tax attorneys in South Africa, and who wrote letters to SARS and reminded them of the taxpayers' rights. So one of the rights, as I mentioned earlier, is that you must be informed. You have the right to understand why you owed SARS this amount of money. There was no letter of findings issued by SARS before this assessment was raised, so there was no way for the taxpayer to argue a case. And you know, in the event of SARS, is pay now, argue later. So SARS was expecting this money to be paid and was getting ready to attach the money through ways, shapes, or form. And then after 2-3 months worth of contention, we have this letter from SARS. Says the outcome of the objective, the South African Revenue Service has considered the notice. The objection against 2018 tax return has been allowed. So after all this nonsense and effort, SARS says, okay, we now understand, because you've appointed the lawyer, your objection against this additional assessment is allowed. She then received back a revised assessment where SARS now owes her 599,000 rand. So it's a great outcome. This was, so by the way, the refund she was expecting when she submitted the tax return via her accountant, but it took some time for us to get there. Why this case is significant is because it's run-of-the-mill. It is not a big organization that has complicated tax structures. This is a sales organization in the northern suburb of Johannesburg, employing 10, 11 people. And if they had to pay this outstanding tax bill, these people would have lost their jobs. So it's quite significant, and that's why I use it as a typical example. So we know SARS is exceeding their own audit coverage targets. Most of these 1.9 million audits that individuals receive are low impact audits. It starts writing you a letter and says you've been selected for audit, and then the blood drains from your face because you're about to get audited from SARS and you did nothing wrong, and there's a whole panic attack, and then you hear nothing from SARS because SARS did a background check. All they're really trying to do is to verify that your medical aid was paid, your travel allowance is allowed, etc., etc. And most of those times, it does not even require feedback to you as the taxpayer. They do what they call a background desktop audit, and that will be the end of it. The majority of the audits are that. Our focus lies on that minority of audits where SARS treats the taxpayer unfairly, and when assessment is raised that is unfair, incorrect, and the procedure wasn't followed. So many are, as I said there in bullet 3, many are investigative audits, which are serious, stressful, and costly to deal with, because the average taxpayer does not have the wherewithal or the knowledge to understand the Tax Administration Act, the PAJA Act, the constitutionalities around that to defend themselves adequately. And anybody who pays tax can get audited. So our target market is the small to medium enterprise companies, as we can see from this presentation why that is the case. Owners, shareholders, and directors, and the high net worth individuals that sits around that. And of particular interest of SARS is the trusts in which some of these companies are situated. So, sorry, let me just go back. Here's our promotional video. So this is now the ad break, just to give you an idea of the products that we do. It's 1 minute long, so it won't waste a lot of your time.
So you do everything right, pay your taxes on time, and maintain your records. You even have a good accountant to check and double-check your tax returns. This doesn't guarantee that you won't be audited by the South African Revenue Service. You see, no matter how perfect your tax documents are, SARS is looking for ways to increase tax revenues. So they are looking for non-compliance, and they have tons of ways to determine if you are high risk. Let me rephrase that. It doesn't matter if you aren't non-compliant. It only matters that they think that you might be. And trust me, if they are going to look through your records, the taxman is clever enough to find even the smallest error. And if they think they found an error, they will tear apart your files. And then they hit you with a reassessment. Sometimes they don't even tell you why you were reassessed. You just get hit with a notification that you owe them additional taxes. They might even issue a garnishee order and take the money right out of your bank account. So, if SARS issues you with a reassessment, you have two options. You can pay the reassessed amount and penalties to make it go away, whether you're wrong or not, or you can stand up to them and prove you did nothing wrong. The best chance is for you to have your accountant or tax lawyer go to battle for you, which might take weeks or months, and all that work will cost you an arm and a leg in accounting and legal fees. But there's a better way. If you are ever selected for audit by SARS, or if there is a dispute between you and SARS about an unfair reassessment whereby SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for a team of highly qualified and experienced tax experts who will fight the case on your behalf without racking up tens of thousands of rands in accounting and legal fees. This team can include leading tax accountants, tax attorneys, and even your own accountant as may be required to ensure a favorable and fair tax audit and dispute outcome. It's a perfect win-win situation for everyone. So don't wait. Cover your business partners, your trusts, and yourself with our low-cost tax risk insurance, and never worry about a tax audit or dispute again. Do not submit another tax return without tax risk insurance. Speak to your broker to get a quote now. When it comes to your taxes, Tax Risk Insurance gives you the peace of mind when you need it most. Additional information on key product features are available on the Tax Risk website, www.taxrisk.co.za. Tax Risk Underwriting Managers is an authorized financial services provider.
Right, so I'm running out of time a little bit, so I'm going to not delve into the product too much. I think that video pretty much explains what we do. So it just highlights that we pay for the accountants, the attorneys, the auditors, tax practitioners, as you've heard in the video. We cover income tax audits, VAT disputes, employees tax, that's pay as you earn, capital gains tax, and then even appeals to the tax board and tax courts. What is excluded, so we don't actually pay the actual taxes, fines, penalties, and interest. That'll be a disaster if we pay other people's taxes on their behalf. Then also, if you the routine request for supplementary information, if SARS says, send me a copy of your medical aid certificate or your retirement annuity, that's routine supplying of normal information, so that's not covered. And then anything to do with cross-border transaction, customs and excise, exchange control, and that sort of thing. And then most importantly, if fraud and crime is involved. So as soon as we pick up that there's an actual fraud case here, that there was tax evasion, the policy will stop to operate like any other insurance policy does. It's a requirement of a policy that taxpayers must be tax compliant. So we don't encourage circumventing taxes. We protect the honest taxpayer rights. So the product's available as a VAP, as a VAP product. We call it the step-in product on your policy administration system, like SIM, Steel, Flexi, all of those systems. It's available on there as a tick box option for both companies and the individuals. There's a little bit of information on the rates. It's also available on a standalone basis, which is on paper application form or online if you want to, put a portal onto your website to invite your clients in. There's the pricing of it. So if you're a small business with less than 3 million rand turnover a year, then you pay 219 rand a month. If you're a larger business of 100 million rand turnover a year, then your premium is 1,300 rand a month. There's some indemnity limits, which I'm not going to go through with you now because of the lack of time. We'll do that in the product training once we get there. We also particularly cover trusts. So there's two types of trust. One is what we call the trading trust, and the other one is a passive holding trust. The difference is some people use their trust as a business. So there's revenue coming in, expenses. So it's a business run at that level, and then we rate that on business risk rates, so according to the turnover. Asset holding trust generally is where you have a trust to put property in for protection for your future generations. So there's not much trading going on, maybe some distribution of funds to beneficiaries, some interest earnings and that sort of thing. So just as a note of that. So while there's no, so in the Tutu Mwini's medium-term tax speech, he didn't specifically say that there's going to be tax increases. But it is, what he did allude to is that we will expect some large tax increases in the next 5 years looking forward. So the scenarios is probably around 5 billion Rand for the 2021, 10 billion for 2022-23, then another 10 and then another 15. Although even if you look at the current hole in the tax budget, those increases will not be sufficient to fill those holes. What the Treasury has said is in the next medium-term budget speech, these tax increases, which we can expect, will be dealt with in more detail. So looking into the little crystal ball, we can definitely expect more taxes. Right, as a final, I just want to tell you quickly about what we do with people that's in tax distress. So we have a lot of companies that are not able to pay the taxes because there is no cash in the business. So in terms of the Tax Administration Act, there's relief for that. But mostly people don't know about this relief. And what we've done is we've offered our service providers to our clients and people who are not even our clients on a fee-for-service basis. In other words, you pay for this professional fee to help you deal with these tax problems. So we have a little locally produced video, which is a minute long, and that'll summarize what it's all about. If I can get that video to play, that is. Give me a sec. There we go.
By now, you would have heard a lot about the tax relief being offered by SARS during the COVID-19 pandemic. But what you wouldn't have heard is that in these exceptional circumstances, you are protected by law. In fact, tax legislation contains special provisions in our existing laws for taxpayer protection during exceptional circumstances, but you need to know how to access them. In support of taxpayers and businesses in distress, Tax Risk Underwriting Managers is now facilitating access to one of our tax legal experts who is able to assist you. They will evaluate your particular tax situation during a no-cost, no-obligation consultation. Attorney-client privilege applies, so your information is held private. It is not a free service, but rather a professional fee-for-service during these extraordinary times. It is not an insured event as part of our current tax risk product, and your contract will be directly with the expert. Get tax penalties, interest, and even a portion of your capital debt written off. Become tax compliant and e-filing even if your taxes are in arrears. Negotiate a favorable payment plan for SARS. All of this to give you peace of mind.
Right, if you need any more information on this or other things, you are more than welcome to give us a shout. There's our contact details. Karen, that pretty much winds up my presentation. We have 5 minutes or so for some questions and answers. I'm not sure how you want to deal with that. If you've got a list of people having questions.
Yes.
But just
Willem, that was really, like you said, it's not good news. But it was very informative. So thank you very much for that. What I just did is I just wrote some questions whilst you were busy, and Margie's comment was that they can go as far back as 20 years. And I just wanted to know, in terms of both either a business or a personal tax, is that correct? How far back can SARS really go? And on the back of that question was my question to say, but I thought we only had to keep records on our personal stuff for about 5 years. So I think you can speak to both of those.
Yeah, so in terms of insurance operations, of course, we all understand that we have to keep documentation for 5 years after the cancellation of the policy. For tax, it's 10 years, but SARS can go as far back as they want if they suspect criminality. So unless there's prescription under the Criminal Procedures Act, SARS's powers are limitless as far back as what they can go, but only in the event of criminal proceedings. And once you're at that level, you already have the lawyer in your corner, because there's some serious questions to be answered and there's some rights to be protected. So SARS will attempt to overstep that mark. We've seen that before. So it's very important that you do understand your rights. You speak to your accountant. If your accountant doesn't know what's on the go, then you speak to a tax lawyer and get those rights protected.
Sure. Thanks. Then Kobus sort of said, hang on, he understood that there was new rules in terms of authorizing banks to pay SARS directly. So are there new rules there? Can they tell your bank to pay them instead of you? How would that work?
Yeah, so in terms of Section 179 of the Tax Administration Act, SARS has the right to attach assets, including the money in your bank. So SARS will write, for all intents and purposes, a garnishing order against the taxpayer's bank account, which they believe owe them the money. So SARS is allowed to attach money out of your bank account. However, they can't just do so willy-nilly. They have to adhere to certain procedures. One of the most important one, and one of the ones that we keep on catching SARS out on, is this letter of findings. So before SARS can raise an assessment, you have the right, under the Constitution and other Tax Administration Act, to understand what you owe SARS and why that's the case before they can attach any money out of the bank account. So they can do that, but you should know that's coming, right? So you should understand that I owe this money and SARS is going to take it out of my bank account. We see far too often this not happening, where the letter of finding is not issued and taxpayers are just seeing the money disappearing out of their bank account. They have no idea why. They have no idea where to. They just, the bank has been instructed to do so by SARS, and the bank has a certain obligation in terms of the law to either react or not react to those garnishing orders. So if the bank knows this is an unlawful transaction, they are not allowed to release those funds. So yes, Kobus, it is true that SARS can take the money out of your bank account, but subject to some very stringent rules and procedures before they get there.
Thanks. Willem, then my question was, so your WhatsApp that you showed us said, SARS has frozen my bank account. And I'm just kind of thinking on that going, well, if SARS froze my bank account, how do I pay, so as a person, how do I pay my rent and my bond? As a business, how do I pay my staff and meet my obligations? And so then you said, okay, well, then there's a process that you have to do and you've got to go through your lawyers or whatever. How long can that really take for them to get to a point where they've unfrozen your bank account?
Yeah. So what happened in this case is the bank account was not effectively frozen. The money was just cleared out of the bank account, which boils down to the same thing. You don't have access to your money to pay the people, right?
Yeah.
So we've had that before. So what you need to do is put an urgent application into the court. So because there's no dire consequences of the money not being in the bank account. So it becomes an urgent matter. And you need specialist tax lawyers to understand how you submit an urgent application to force SARS to reverse a part or the whole sum that was collected. So if there's obvious wrongdoing on the part of SARS, they will be forced by the courts to return that money. And we deal with that, fortunately not often, but we deal with it a lot. What we deal with often is unfair assessments before they take the money out of the bank account, because then we can take action against SARS. Once we understand that there's an unfair assessment, we can then put an action against SARS so they don't take the money out of the bank account. We ideally not like to get there, but unfortunately sometimes it gets there before anybody knows.
Yeah, very scary. Okay, Karen, did you get any questions by email?
No, nothing at the moment. I can't see. But any questions that I do receive, I will redirect through to Willem, and we will be able to respond individually.
Great. Is there anyone on the floor at the moment that would like to ask a question?
Yes, Lauren, I see there was a comment just asking about if Willem can elaborate on their underwriting process in terms of what info do they require from a new prospect and how do they rate the risk? Do they work on indemnity limits? How does that work?
Yeah, so it's a good question. So if you access the product as a VAP via your Sims or Teal or Flexi, one of those things, the underwriting requirements is very little. So we need a declaration that you're not currently in a tax problem, because that will just be excluded from cover then. It's the old damage type of scenario. If you take the individually underwritten product, which has got high indemnity limits, the turnover of the company, the annual turnover, is what we use to determine premium. So small companies pay less, large companies pay more, and then your indemnity limit is automatically selected depending on the size of your business. So if you have, if you're a 100 million rand business, then you get $1 million worth of cover. If you're a 3 million rand business, then you get 250,000 rands worth of cover. So the cover we give under the individual underwritten policy is more than sufficient. We've never run out of the indemnity limit. We specifically pegged it at a level that we can deal with a tax problem from A to Z. With the stepping product, the VAT product is better priced because the indemnity limits are lower. So the broker would then need to say, listen, my client is a higher risk. He might be in the construction industry, has a large cash element in the business, so rather get an individually underwritten product. But for the run-of-the-mill business, the VAT product is more than sufficient. I don't think we've ever run out of indemnity limits there. So to answer the question, the size of the company determines the premium, and the indemnity limit is automatically selected, depends on the size of the business. Sorry, Lauren, you're on mute. Lauren, you're on mute.
Lauren, you're on mute. Unmute.
Sorry. Okay, so I wasn't actually interrupting. So you were saying by referral or specifics, we can increase that limit for our client should they say, look, actually, as much as you say I need $1 million, I want 2 million for that would give me peace of mind. Then you would just underwrite that separately as a referral.
Yeah, you can, but generally speaking, if the client is a small business, the indemnity limit we give is more than sufficient. So there would be no requirement for the guy to buy up cover because the indemnity limits we provide are sufficient. We've on purpose put it high enough so we don't leave our clients hanging halfway through an audit. That's the worst thing you want to do.
Great.
Fantastic.
Anybody else got some questions?
I don't know, Willem, if you're looking at the chat line, but there's a lot of people saying thank you so much, very informative. I'm sure that you're going to be contacted after this session. If there are no further questions, we are running a little bit over time, and I know that people can come and go as they want. But I think to sign off, we are recording this. We're going to make sure that the quality is good enough, and then if you do need a copy, we should be able to post it somewhere, which I'm assuming, me being technologically challenged, probably on the FIA members lounge, but we will revert with that.
Great.
Okay, so Lauren, anything else from your side?
No, actually the one thing, sorry, and this is more on your product, Willem, was, so now, you got me thinking, you got me in a panic, and I'm saying, okay, well, there's definitely 10 clients that I really need to introduce this product. Would you be open to a Zoom type platform with a broker's clients who are interested to be able to sit together? Is that something you could do? Just as an interest because most of us here are brokers. So
100%. So if you are already a broker of ours, then clearly the process is easy. If you want us to assist you with, as underwriting managers normally assist brokers to write up a few, the clients, of course, the technology is available to us. We'll help you. If you're not a appointed broker yet, then you write to us. We'll go through then the normal take-on procedure to get you as a broker, and then we follow that process. We do the product-specific training with the terms and conditions, etc., etc. It's really not a complicated product. I know people sometimes feel fearful because it's tax and tax is this big black hole. But if you understand products like legal assistance type products, you know, the principles are basically the same. It's just the skill set that we bring to the party, it's fundamentally different. But what you're doing is so it's not a difficult product to understand. The terms and conditions are not onerous, so the broker often gets it quite quickly on the product specific training, but it's still good to hold your hand for the first couple of meetings with your clients. Get comfortable with the tricky question. So if you sell to the accountant and he asks you, is a IT 14 SD type query covered, then you go all wobbly in the knee because he's jargon, right? But we understand it. Yes.
Cool. Thanks, Willem.
Thank you very much to the FIA for inviting me on. I enjoyed it very much. If you have any questions, there's the contact details, or you can go via Karen or Lauren, and we'll be happy to help. Thank you very much.
Fantastic. Thank you, guys, and thank you everyone for attending. And hopefully we will see you same time next week for our Power Hour with Discovery Insure.